What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. It's Friday, so today I'm doing the weekly installment of the 52-week challenge, just talking about what I bought this week. If you don't know what that is, at the end of this video, I'm going to have a link to the playlist where you can, the first video in that playlist explains what we're doing here. But all I'm going over is all the fractional real estate that I bought this week across any of the sites that I bought something on. So I got three properties on Lofty, 17 notes on ground floor, and one DAC on Saul's lot. And I just want to go, I'll give you a little bit of an understanding of what I'm doing on each one. So please note, just because I buy these properties does not mean they're right for you, right? You want to do your own due diligence on all of them and on all the platforms. I do have links in the description of this video to all the different places where I'm currently investing. There's also a link to the Discord if you want to jump in there. It's just a generic fractional investor, fractional real estate investing Discord that I've set up. I think we just passed 80 people in there now. A lot of people that get in there every day talk about several different platforms, and it's a great place to share some knowledge, gain some knowledge, and talk about just working together to make this a better industry for all of us to make some money. Um, so on Lofty, I bought just a couple tokens in this 566 Nash Street. It's in Akron, Ohio. This is just a pure discounted token strategy. You've seen me do this quite a bit of times. There was a little dip in the price. Uh, the management of this moved over to Walick, which I've got a decent amount of trust in him to be a good manager. He's buying into all the ones that he's managing. And so he has, a real incentive to make sure that he's doing it well. And I think if you look at the discount on this one, even with, there is some debt. Let's see, because there was a capital call. Oh, what am I doing? I'm clicking on the wrong thing there. Um, where do we see it? I feel like, oh, no, I was on the right tab already, right? They always give us that update right there. So there is a current capital call balance is $10,000, and so we need to take that, add it to or subtract it from our value, right? And then we look at the price multiplied by our tokens. And so when I do that, to me there just looks like there's a ton of room. Now obviously it's going to be a little while before it's actually spitting out cash, um, because it does, we do have to finish paying off that capital call. But this is one that I think we could sell in the real world and make a decent profit, or we can get it back up and running and have what I believe will be a really fantastic yield based on where I bought into it for. Um, I bought a little bit more of Colfax. This is, the Chicago multifamily. It's actually two buildings. Um, it actually looks like there's some progress being made on getting the squatters out. There's some discussion on maybe we're going to sell one of the buildings and then just keep operating the other. This is another one where I think that, let's see, there wasn't, this is one that came over from Yom. So, there is some uncertainty, although I think that most of that's been cleared up on a lot of the properties in Chicago. Um, I would like to see, though, them do a better job of just keeping these uh, all the same, right? When I look at them, but let's see if we can see it here. As far as whenever we have, yeah, okay. So we do have a big negative here, right? As far as for the operating reserve. So there's some, but I mean that relative to the value of these properties, this is a very small amount. And again, so this is a pure discount. That's the reason I'm buying it. If you've been in real estate for a while, you make your money when you buy, right? And so that's what my goal has been, especially on Lofty. These are not necessarily great properties in great areas. They're just fantastic prices relative to the value that you're getting, right? And so that's been a shift in strategy for me, but it's worked really well on Lofty so far, and so I'm going to keep at it. This is a much different purchase for me. This is, 86 Madison. I bought, uh, quite a few shares of in this one. Not a ton, but I think I bought all of these this week. I think 35. Is that right? No, maybe I already had a couple. Maybe I already had 10 and I bought 25 more. This is one of Earl's properties. He's Ecosystems. Um, this is a management company, but this is actually one that was he's a co-owner of that he brought to the platform. Um, I own some of one of his other properties, the 90 Madison. It's on the same street. He's operating them the same way. I just think he does a good job. These are not properties that it's not a market I would typically pick. It's not a property I would pick. His risk profile is much different than mine, but over time, I've just really come to trust his ability to execute. And quite frankly, he was talking about he was looking for some liquidity, and he had some of these that he had listed at a discount. So I just picked those up. I feel like I wasn't being too magnanimous. I think I'm going to make money on him, but I thought at the same time, like, he's doing a ton for the platform at the moment. Why not pick up some more of his properties? And I think I think a bet on him being successful is a pretty winning bet, but it is, very, very far from my typical strategy. So, um, and I think that this is actually more indicative of how a lot of people are making their decisions on here. I don't necessarily think that's a great move, right? It's something that I wouldn't do if this just wasn't, out of having an excess of investment capital to put to work on here. It's not I wouldn't be risking some huge portion of my net worth or something to try to do this. But because I think it's really important to stick with your own investment criteria. So like so to go so far outside of what I normally do, it really is though just that I think that he's been operating these successfully, multiple ones on the same street, and I just it's hard to picture him failing just because of the way he goes about it. And I was with a little bit of a discount, I was happy to get in there. Um, the on ground floor, I picked up 17 pieces of 17 mortgages. Um, you can see one thing that and it all just continuing to turn over, the stuff that's being paid off. You can see my actual total has gone down, and it's because I have cash stuck in here right now that I can't reinvest because ground floor has limited us to. I thought this was really interesting. You can only buy $100 in any one of their LROs right now. So I had contacted them, and they mentioned that the reason that is there's, they had what do they say? They had a bond issued earlier this week, and so that they paid out a bunch of the LROs, and that's why we got all our LROs paid off. I think I had 15 or 20, which that's just the interest that we have in the mortgages. It's a limited recourse obligation, something like that is what that stands for. Um, but so because they did that and they helped, it caused a bunch of people to have cash in their accounts. Then they're limiting how much cash you can put back to work, so that everybody can reinvest some. And they said they have some more of these coming out. So I don't know. I mean, it's not a ton of money, but it's like $800 that's just sitting here in cash. That if they don't fix that soon, I'll just move to another platform. But so you can see, for open projects, I'm down to 115. This is the first time in a long time. Well, I actually think I had a slight downtrend last week, and maybe these were already paying off. But you can see now I've had 74 paid off in total. So, a real big percent of what I have left has already been paid off, all of which have paid in full at their actual rate or higher, um, or their expected rate or higher, which has been fantastic. Um, Still have been lucky to not have any defaults. So, I know I've talked with quite a few people in the Discord that have not had this same experience, have had a number of defaults, and their average return is significantly lower because of that, because those defaulted loans stay open much longer. They drag down, they're able to drag down the average much easier than you might think because of how long it takes for that to happen. Um, but I still, like I said, I've just been lucky still. Uh, and I don't have any, at this point, I'm really, most of the larger investments that I've made have paid off. And so now I really have very small amounts spread out across all the mortgages that I have. Um, So even if I did start to get some defaults, that they'd all be relatively small compared to, the total portfolio, which is my goal on this platform, right? I haven't tried to go in and pick individual ones. I'm just trying to get extremely wide diversification, trust that they are, doing their risk adjusted returns properly to where if I just spread it out across all of them, I'll get a blended rate and I'll have blended risk and we'll see how that works out. So far, so good, but it is still really early. I just started with them in September, I believe. And then the only other thing I bought this week was on Saul's Lot, 2405 Paulin Way. I don't talk about this one quite as much, but I did a video when I purchased this one. It's a DAC, which is, oh, I'm not even going to tell you what that stands for. I always forget. Um, but it is, it's just an interest in the equity of this homeowner or in the homeowner's equity that when they sell it and we get to we bought that equity for a discount, we'll get, it's a forward sale and we'll get paid off on that. Um, I actually I think I bought 10 of these this time because they've now priced them down much lower. And it's the property itself, I did the due diligence on it. Not doing a whole bunch on it because it is, the property's already ready for sale. Just wanted to make sure I thought the appraisal made some sense that uh, but there's not, it's very different due diligence than on the other properties because I'm not trying to figure out like, what this is going to rent for, or is this a good market to hold long term? Because it's intended to have a very short hold period. I think I don't remember the maximum on this one, but probably somewhere around 8 months maximum. Let's see what they have. There we go. Did fix that for me. This guy who's running this site is very responsive. I mentioned a couple different things that were problems, and he just like got them fixed right away. So it was good to see. Um, I don't. This is their 3-year growth that doesn't really apply to this. I don't know where it is. I'm probably just missing it because I'm trying to read and talk at the same time. But yeah, these are all intended to be very short-term holds. And then the quicker that they end up redeeming, the higher our return is because we get that 14% ROI regardless of how long. Um, assuming it doesn't go past the time period, and then it may go up. But based on that, if it pays off quicker, that becomes a very high annualized return. And so, yeah, they do this calculation for you, right? And that's why picking these properties. This is actually something that Matt, the founder of this site, had mentioned earlier this week, and I thought it was kind of astute. Is like you want to have, having a brand new property is really helpful in this situation because it's much less likely to fall out of escrow due to an inspection. And the just the time it takes to find a new buyer, put it back for sale, and try to sell again is going to make a big difference with these, right? Because of the way the profit works, it's not based on how long you're holding it. It is a set amount, and it's so your actual return goes up as it your actual annualized return goes up as your holding period shortens. And so I had mentioned in the past that I don't know. I think that I'll just probably start getting some of every single one on here. But thinking more about it, I thought that was a great point. And once there's some really large volume, I'll probably take the time and try to figure out, well, which ones do I think will sell the quickest, right? And then, or if I identify some that I'll probably do the opposite, right? Instead of trying to pick 10 winners, if there's 100 on here, I'll try to just kick out the 10 that seem like they're going to be the most problematic. And I've talked quite a bit about that in another video where we were talking about Howard Marks' book, The Most Important Thing, and the way he goes about picking. He's using debt usually, but it's a different it's a different product. But I think that the same sort of thing applies as far as like it's really hard to pick winners, but it is less hard to kick out losers oftentimes. And so that's one of the things that I think I'll probably spend some time doing once this platform gets to scale, right, where they have a lot that I can choose from. And it seems like he's making progress, and that might become a reality sometime soon. At the moment, I think there's you can buy them in this one. I think they might be available in one other one, but they might not even be. They might all be All the rest of them might be sold out at the moment. He is still working on this site. It doesn't work perfectly to try to scroll through these. But I think, yeah, this is the only active one at the moment. Um, but again, they're very new. The reason I talk a lot, I've mentioned this one quite a few times, is I think it's a really ingenious business model. I think there's a ton of potential for this to be huge. And so, as much as I'm trying to make money on here, and I think that I will, and the one that's paid off already was a fantastic return. Um, just as much as that, I want to support this platform because it's one that I think I could make money on for a very long time if it actually gets to scale. And I think it's a product that's really needed out there in the marketplace as far as the people on the other side of this transaction, who are getting access to a little bit of capital in their home prior to selling it. So that's everything that I bought this week. Let me know what you're buying. You can jump in the Discord, talk about it in there. I have a separate channel for the 52-week challenge, or you can just put it in the description below. Or it seems like more people than anything else like to just DM me. You're welcome to do that as well. I think that all of us will get the most benefit by talking about it in one of the public forums, right? And if you don't want to say exactly the properties you're doing, that's fine. But like if you want to describe the strategy and the platform, it's mostly we're just trying to be an accountability group here where we're all working together to make sure we're making investments every week. One of the things that I thought was interesting, I was talking to someone in the Discord today, and they actually look at it a little bit differently. They're just happy as long as they're moving money onto the platforms every week. Whether or not they actually pull the trigger on something is not as important to them. And I think that's a good way to think about it too, because the goal is you should be continually investing. At least that's my goal. But I also think, one of the things that I talked about when I started this is that, I see a lot of people get this sort of analysis paralysis where they see all these deals and so then they start to not buy any of them, or they're just waiting for the perfect situation. And so by trying to pull the trigger on some regularly, um, that was sort of my goal when doing this. But I think both strategies there are perfectly legitimate. And he had mentioned like he's putting in orders regularly, but they don't always sell. And so I think he's using limit orders on Lofty primarily, because most of the other platforms you just if you want to buy it, you buy it. But that's really it for me today. Please tickle that like button, poke it, whatever you want to do to it. Hit the bell. I'm remembering the bell now too. So this is like, you're welcome that I'm becoming a professional YouTuber. Um, I think that's really it. Until next time, I'll just keep making mistakes so that you don't have to.